Hey guys, welcome back to another lesson. In this lesson, I'm going to be covering a popular request, which is how to detect pivot points in the markets using Pine. So what you see on my chart right now is a customized pivot point script that I've adapted from the inbuilt TradingView pivot script. And I've added a couple of features here. I've added the background color option and delete last line option. And if you turn this on, it will only leave the last detected pivot on your chart, as you can see there. So I'll leave the default settings on for now. Now, as I've mentioned several times when it comes to identifying subjective-based patterns in the markets, detecting impulsive moves and pivots in the markets, price legs, is extremely difficult, at least to do accurately. Like, what I mean by that is, for me personally, I would read this market pretty much how this script is reading it, but there are times when it detects pivots that I don't really agree with. So for example, right now, we have this impulsive move up here, which looks okay to me. And then we have this pullback here to this low, but the script is not detecting this 1, 2, 3 move, which I would, using my human eye, I would identify this move as a move that just broke structure. And I would class this market gold as in a temporary reversal situation, not necessarily a downtrend yet until we get another lower high and lower low. But we do have a potential reversal here because we have this impulsive move up here, a pullback, we made a swing low, we then made a lower high and now a lower low. That is an indication that this market could be entering into a bearish phase for a while. Technically, until we take out this low, I would class this still as an uptrend. But in the short term, especially on these lower time frames, we're in a downtrend right now. And this pivot point tool is not showing that. It's detecting this move as the impulsive move. But this move here was not significant enough to be classed as a second pivot. And so I'm just trying to explain here the limitations of using code to identify market patterns. If I open up the settings menu, we can tweak these settings a little bit to adapt this script to detect the pivots slightly differently. So for example, if I lower this deviation setting down to 2, the pivots have now changed. If I lower it even more to 1, that doesn't seem to have changed anything. Let's go even lower. Still no difference. And so this is about as accurate as this tool is going to get in terms of identifying pivots in the market. So I'll leave the default settings as they are for now. And I'll just quickly explain what these settings do before we jump into the code. The deviation setting is used to identify when the market has a significant pullback from a swing high or a significant rally from a swing low. So the higher we set this setting, the more significant the move must be in order to be considered an impulsive move. And the lower this number is, the less significant the move must be. And so as you can see here, if I get rid of this friggin' tool and I drop this down to 1, notice in this price action here that the pivots, if I can get rid of that, watch this where my mouse is here when I click out of this box. Now the script is more sensitive because it requires less of a deviation from a swing high or a swing low in order to count that as a pivot. And the next setting here, depth, is how many bars to look over in order to determine whether we have a swing high or a swing low. So by default, I've set this to 12, which means that the script is looking 6 bars to the right and 6 bars to the left. And if this bar in the middle is higher than all of the bars to the left and right, then it's counted as a swing high, and same for a swing low. If this is the lowest bar over the past 6 bars to the left and the 6 bars to the right, and we also get a deviation, a significant price move from that low, then that is counted as a pivot point. So keep in mind that this script requires several bars to print to the right of the swing low or the swing high before it will consider whether or not the swing low or swing high is significant. So in other words, it's slightly lagging. Now you can drop this number down if you want to, and now it will be a little bit more responsive, but it will also pick up more noise in the market. So that is always a trade-off you will have to make when creating scripts like this. No matter what settings you put into your script, the way the script identifies these patterns is going to entail a trade-off between accuracy under certain circumstances. That's why personally I'm not a big fan of analyzing price action in this manner. I prefer to identify things like swings, impulsive moves in the market manually with my eye. But if you do require your script to identify impulsive moves like this, then this script that we're about to break down is about as good as you're going to get in terms of your code accurately identifying these swings. So anyway, with all of that said, let's get into the source code and start breaking down how this script works. So the first thing I do is get a bunch of user inputs, which we just went over. I didn't mention that the BG color changes the background color based on what the last pivot was. So you can see that we had a impulsive move down here, and then the chart began plotting red in the background. And then once we got a pivot high or a impulsive move up, then the chart turned to green. And remember that the depth is how many bars to look left and right. So with a 12 bar depth, we're looking 6 bars to the left and 6 bars to the right. And so if I click on this swing high here and measure out 6 bars, you can see that on the 7th bar here is when we start plotting red, because that is when this swing high to the swing low pivot was detected. Now this background color setting is a little bit off with what you see on your chart. And the reason for that is this. If I use the bar replay tool and we step forward here, we can see the script working in real time. You can see that it just detected this swing high to swing low, this impulsive bearish move. And if we move forward a little bit, now it's detected this swing low to swing high impulsive move. It's counted this deviation from the swing low as an impulsive move. Technically, it's not really an impulsive move. It's just a bit of volatility in price action here. I personally wouldn't count this as a impulsive bullish move, but the script does, because the script is dumb and it doesn't know how to differentiate between a large candle in consolidation and a actual impulsive move. But anyway, if I move forward here, you'll see that the script will update this swing low to swing high impulsive move when a new swing high is detected in the same direction. So just there, if I go back 1 bar, you can see that the script is detecting this as a pivot. And then if I move forward 1 more bar, we've had 6 bars print since this new swing high, and the pivot gets updated. Oh, 1 more bar. Now the pivot gets updated from here to here to from here to here. And so what the script is doing is updating the impulsive move as it unfolds, so long as price action is still developing in that same direction. So long as price is rallying here and we get these swing highs with a large pullback, our pivot will continue to update higher and higher. Unless we get a swing low with a significant move. If that happens, then the pivot will stop drawing in the bullish direction and then reverse to the downside. But anyway, we'll get to how that happens in the code in a moment. So if I progress through historical price action slowly here, you'll see that our pivot will continue to update. So the next time we get a significant bearish pullback, our pivot point will update to the new swing high. Keep going. There we go. So now the script is detecting this as an impulsive bullish pivot, and you get the idea. If I get out of the bar replay tool, that was our last swing high, and we now have a new pivot to a swing low. So now let's jump into the source code and break down how the script works. So first of all, we get a bunch of user inputs, which I've already gone over. Then we have a deviation threshold here, which calculates the deviation threshold for identifying major swings. It takes the average true range into account, so it does adapt based on volatility in the market. And this little formula here gives us our deviation threshold. So this will give us a number in pips that price must move in order for a new pivot point to be considered valid or significant. Next up, we prepare our pivot variables. So we have our line object. This is the line you see on the chart. We have the index of the last pivot, which is the most recent pivot. And then we have the index, the bar index of the previous pivot. And these indexes are used to draw our line between. And then finally, we have our last price. So I stands for index, P stands for price. And we're tracking the last 2 bar indexes of our pivot. And we are tracking the price value of our last pivot. And then we have is high last. And if this is false, then it means that the last pivot was a pivot low. So if the last pivot was a high, this would be true. If the last pivot was not a high, then it would be false, and we have a pivot low. All of these variables are persistent, so they are tracked across price action as it unfolds. The next thing we do is define a custom function for detecting pivot points and returning the price and bar index of that pivot point. So this is a little bit difficult to explain in plain English, but I'll do my best. This function takes 3 inputs, price source, a look back length, or depth, that's our depth setting, and an isHigh Boolean parameter. And if isHigh is true, then we validate a pivot high. If it's not true, then we're trying to validate a pivot low. And what we do here is first we create a variable called L2, which is short for length 2. And this is our length, look back length, multiplied by 2. Now, when we call this function, we actually divide our depth value by 2. This is how the TradingView developers wrote this script. This is the approach they went with. So when we pass in a depth of 12, what actually gets passed into this pivots function is the value 6 as our length. Then that gets multiplied by 2 to get our actual depth value, which is 12. And then C is our price value of the midpoint. So when we pass in our value length, this parameter here, when this gets passed into our price source historical operator, because we are dividing depth by 2, that means we're looking back 6 bars, and we get that 6th bar, and then we loop from 0 to L2, which is 12 bars, because remember L2 is our length multiplied by 2, so we get our actual depth value here. And then these if statements here check if isHigh is true, then we check is the price source of each bar that we're looping over. If that price source is higher than our midpoint, our C value, then OK is set to false, and the function will return NA. It will return a NA integer and an NA float because the pivot is invalid. Basically, if this OK check fails, that means that there was a bar to the left or to the right of this swing high that was higher than that current bar. So in this particular case, this bar would pass this check because if we look 1, 2, 3, 4, 5, 6 bars to the right and 6 bars to the left, it is the highest bar over that period. There is no bar that was higher than that bar, and so this check never gets executed, and OK remains true. And then if OK is true, or in other words, if the pivot is a valid pivot, either a pivot high or a pivot low, then we return the bar index and the price value as a tuple. So this function returns 2 values, the bar index of our pivot and the price value of our pivot. And we use that information later on to draw our lines, but we'll get to that in a moment. So after we've defined this custom function, we then immediately use it in these two tuple values here. So we have IH and PH. That's the index high and the price high of our pivot, and index low and price low of our low pivot. So we pass in the high price, our depth divided by 2, and true. The value true means that we want to check if it's a high. And then for our lows, we pass in the low value and false as is high, and that validates our pivot lows. Next up, we then have another custom function here, which calculates the price deviation, which is used for validating large moves. If we don't do this, then the script will identify every single swing high and swing low as a pivot, and we'll get a lot more noise being picked up in the lines that are drawn onto the chart. So this calc dev, or calculate deviation, takes 2 parameters, the base price. So this is the price of our last pivot point, and this price value is the current pivot price. So we pass in the previous pivot price and the most recently detected pivot price, and if we have a significant deviation, then that new pivot is validated as being important or significant, and the line is updated. So next we have another custom function for detecting pivots that meet our deviation criteria. So this function combines all of the information we've got so far to update our line if the correct conditions are found in price action. So the first thing we do is we check if the last pivot was a high, so it was a high pivot, and the line is not NA, the line object is not NA, then that means we are checking the bullish direction of a new pivot. So all of this code within this if statement gets executed if the new pivot is in the same direction as the last pivot. As I showed you when we had the bar replay tool playing, first it detected this as a pivot, and then a new pivot was detected here, and the line looked like that, and then a third pivot was detected there, and now the line looks like that. That's what this if statement here, right here, that's what this code is responsible for doing. So if we have a pivot, a new pivot in the same direction as the last, and the price of our new pivot the pivot price, is greater than the last pivot high, which is true in these three cases, then we update our line. So we use the line.setxy2, and this function here updates our line. The line.set function takes three parameters. The line object, we want to update the bar index, the new bar index of the most recent point, and the price value of the most recent point. So in this pivot here, it doesn't update the XY1, it updates the XY2, or the rightmost bar index and price value of our line. And then this pivot found function returns our line object and this Boolean value that tracks if the last pivot was a pivot high. This gets returned as a tuple. Otherwise, if the new pivot is lower than the most recent swing high pivot, then we return NA. We return an NA line, a null line, and a null Boolean value, and nothing gets updated. So that's this if statement, which is responsible for updating the line. We also check the same thing for a low pivot. So if the last pivot was not a swing high, then it's a swing low. And we check if the current price is lower than the last price, than the last pivot price. If that is the case, then we update our line to the downside. Otherwise, if the latest detected pivot is lower than our swing high and we're updating in the bullish direction, then nothing gets updated. And same for a new pivot low. If price action were to unfold like this, and then we get a pullback and then another pivot low, but this pivot low is higher than the previous one, then we don't update the line to that one because then we would have price action down here and our pivot line drawing to that new pivot low, which is higher than the previous swing low. And that's not what we want. And so that's what this block of code here is responsible for doing. And then we have this else statement here that says, if we have a new pivot in the opposite direction, so if this check fails, or our line has not been updated yet and is null or NA, then we check if the deviation value or parameter, the price deviation, is greater than our deviation threshold. If that is the case, then the price move is significant and we create a new line between the pivot points. So ID equals a new line, and this new line takes a bunch of parameters. The first one is the last index of the last pivot and the last price value of the last pivot, and the index, bar index of the current pivot and the price of the current pivot. And that creates a new line or a new pivot. And the old line is basically finished drawing. The old pivot is done, and we now have a new pivot that we're going to continue updating to the downside. So if we get another pullback here that's significant, greater than our deviation threshold, then this line you see here will be updated to that new swing low pivot. And then if we get a rally here and then a pullback from that rally that's significant, then we'll get a new line drawing from that swing low up to the new swing high. That's what this if statement here is responsible for doing. And it also returns a tuple. It returns the new line ID and whether or not it was a high pivot, a swing high pivot. And otherwise, if we have detected a pivot point, so we've detected a bar that is the highest bar over our depth look back period or the lowest low over our depth look back period. However, the deviation, the price deviation, is not greater than our deviation threshold. So we only have a small move from that swing high or swing low. Then we return nothing. We return line as NA and Boolean NA. So that's our function for updating our pivots. Whenever a new pivot is found or an existing pivot needs to be updated, all of that is handled by this function here. And then this code here is where we combine everything we've gone over so far into actually analyzing price action. So remember, we have these tuple values up here: index high, index low, price low. These are our pivots that get detected. If we have a valid pivot point, these variables will have a value assigned to them. If we do not have a valid pivot, they'll be NA, they'll be set to NA. And so what we do here is we check if our bar index for our pivot high is not NA, then that means that we have just detected a valid pivot, a valid swing high pivot. And then this if statement is executed. And the first thing we do is we calculate our price deviation from the previous swing high to the new pivot high price value. And then we pass this deviation threshold into our pivot found function, which we just went over here. And this function here checks if we have a pivot and a deviation from that pivot that is significant. If that is the case, then we get another tuple value here, which is our line ID and whether or not the last pivot was a swing high. If this pivot found function either updates our new line because we had a valid pivot in the same direction as the current line direction. So remember, that's the line updating from each swing high in the same direction as this impulsive move. If that is the case, then these tuple values will be set to these values here. Otherwise, if we have a new pivot in the opposite direction to the one we're updating, and the price deviation is above our threshold, then these are the values that will be returned in our tuples. And if we don't have a valid pivot that is either updating our line in the same direction as the previous pivot direction, or we don't have a new pivot that exceeds our deviation threshold. So if this pullback you see here was shallower, like let's say it was just sitting here, we wouldn't have a pivot being drawn and we'd be getting NA returned instead. And so once we get all these values from our custom functions, we can then check if our line ID is not NA, or in other words, if the line has been updated, then update the price and index values and delete the previous line. So if this new line ID is not equal to our last line ID, that means we have a new line drawing, in this case here. And if we have delete last line turned on in the settings menu, then we use the line.delete function to delete the previous line. So now if I come to the settings menu and I turn delete last line on, we'll be just left with this most recent line. And every other line that precedes it is being deleted when the line is updated to a new line. But I'll turn that off for now. And here is where we update our persistent variables that track these pivots. So line last is reassigned to our new line ID. Is high last is reassigned to whether or not the current pivot is a swing high. Our index for the previous pivot is set to index of the last bar. So in other words, if I zoom out a little bit, this is the first coordinate of our line. This is the second coordinate of our line. But when we have a line updated, as in the case here, this becomes our coordinate number 1, and this becomes coordinate number 2. So it was 1, 2. When a new line is detected, this gets overridden with the last index and price value, and this becomes our new second coordinate for our line. That's what all of these variables here track. And then we have an else statement here that checks for pivot lows. So that handles pivot highs. This else statement handles pivot lows, and it does exactly the same thing as our pivot highs. Calculates the deviation and everything, but it's doing it in the opposite direction. So we're passing in our PL, our pivot low price value, instead of our pivot high value. And all of these variables here are tracking the low value, the price low and the bar index of our new pivot low. And that's it. That's the core logic of this script for tracking price pivots, significant swing high and lows in the markets. All right, so I had to take a break between recording the first part of this lesson. Now it's a few days later. I'm going to wrap up what we've covered. So you can see that gold has, in fact, continued lower after the breaking structure here. But now to wrap up this lesson, let's have a quick look at what we can actually do with the information we've just gathered. So if I scroll down to the bottom of the script, here I have a little bit of drawing code that interacts with the lines we have here. So first I'm getting the start bar index of our line, of our most recent line. I'm getting the start price of our most recent line. I'm getting the ending index, bar index of our most recent line, and the ending price. Then down here is where I change the background color of my chart, and the color changes based on whether the ending price of our line is above or below the starting price. So in this case, when this pivot low was detected here, and we started drawing a line from this high down to this low, the background color of my chart turned red or bearish because the last pivot was a bearish pivot. The last impulsive move was a bearish impulsive move. Now, this isn't a perfect bullish bearish filter on its own. You can see here that the chart was red all the way up until this pivot up here was detected. Ideally, you'd probably combine this condition of the previous pivot price being above or below the most recent pivot price with other market filters. If I throw on the bar replay tool on this pivot low here and we cycle forward a bit, you can see that as soon as the script detects a bearish pivot, the background color of my chart turns red. And if we cycle forward, we don't get a new bullish pivot until all the way up here. So keep that in mind. It's not a perfect system. This is just to show you how we can interact with the pivot values that we've just calculated. I've also added a offset here, a negative offset based on our depth. So if I get rid of this offset, if I set this to 0, because remember, our pivots are detected on a lagging basis. We need at least 6 bars after our swing high or swing low is detected. So I've used a negative offset for the background color so that that lines up with where the pivots are detected. I'm also plotting the distance in pips from the swing high to the swing low. That's this purple number up here. If you look up there and I measure from this swing high down to this swing low, we have about a 114 pip distance, which coincides with that purple number up there. And then finally, if I uncomment these 4 lines here and save my code, we'll now be getting a red line. Let me turn the background color off. We get a red line and a green line drawing, highlighting the swing high and swing low of our most recent impulsive move. So this could be an interesting filter to combine in your scripts. For example, perhaps you have a pullback strategy or even a breakout strategy, and you only want to trade bearish or bullish breakouts so long as price is trading below this pivot swing high, and the most recent pivot swing low was a bearish one. That's just an example there. One other thing we can do, if I comment out our lines so that we don't clutter our chart too much, and I uncomment these plots, if I save the code, this is doing exactly the same thing, except it's plotting the red line is the last pivot price, and the green line is the starting pivot price. So this green line here is showing where our pivot began, and the red line is showing the last pivot price. And so using these plots, you can see the script updating the pivots as it goes. So initially, we had this swing high detected on this bar here, and then this swing low was detected on this bar here, because remember, we have a 6-bar delay, and then so on. You get the idea. And so I'll wrap this lesson up here. I'll leave the source code below with some of these lines uncommented. And yeah, this is a somewhat convoluted, but one of the most accurate pivot detection scripts I've seen so far in my research in Pine Script. It's not perfect because there is still some subjectivity in the settings you put in here, but it is what it is. That is the price we pay when working with code and subjective price patterns. There is always going to be a compromise between accuracy and simplicity. I mean, perhaps if you had a 1,000-line code script that analyzed every minor detail of price action, you might be able to get this to be a little bit more accurate, but there's no guarantee that the script would detect impulsive moves any better than this script does. That's why personally, I like to keep my rules as simple as possible in my strategies when it comes to automating them. Rules-based discretionary strategies are a completely different story, but if I was automating a script that used this sort of feature or this sort of functionality, I would be very conservative in my expectations of it being accurate. Anyway, this lesson is long enough. I'll wrap this up here, and in the next lesson, I will show you how I created my dynamic structure indicator, which attempts to detect support and resistance in the markets. Slightly different to pivots, but similar kind of concept where we're trying to detect subjective market patterns and structure in price. Hey guys, I hope you found this lesson interesting. If you did, make sure to hit the subscribe button and just check back later because I will have some more lessons coming out very soon. Otherwise, in the meantime, if you want to learn more about Pine Script, check out my website. The link is above, pinescriptmastery.com. I have a free basics course there that goes into a lot of detail about the fundamental basics of Pine Script if you're new to Pine. Then there's a mastery course, which is extremely popular at the moment. And this course will teach you pretty much everything you need to know to go out and fish using Pine Script. I do give you some fish in the course in the shape of giving away some of my scripts, my personal projects, and the code that I've written to achieve certain things. But really the course is intended and designed to teach you how to convert your own trading ideas and techniques into code so that you can create tools to assist in your own trading, however it is that you trade. We all trade differently, but I've tried to make the Pine Script Mastery course a versatile course that covers all the bases. And then finally, there is my indicators and strategy scripts for those of you who just want to steal all of my work that I've done over the years. I have every single script that I've ever written that's worth mentioning. The source code is up here with lessons, detailed lessons explaining every block of code, every line of code, why I did things the way I did, and a little bit of bonus content here. Now, obviously, I'm always expanding these courses. So what you see here is what I've done so far, but there will be more lessons to come, especially regarding automation and student questions. Anyway, with all that said, I'll leave this video here and I'll speak with you in the next one. Take care, and as always, best of luck with your own trading. and your coding.